Welcome to this explainer. Okay, so if you've ever just stared at your bank account and felt this sudden, overwhelming wave of anxiety, or if you've literally spent hours wrestling with crumpled receipts and messy spreadsheets until your eyes cross, well, you are definitely not alone. For decades, managing our money has kind of felt, tedious and incredibly stressful. But what if we could flip the script? What if you could go from feeling totally overwhelmed by money management to feeling completely empowered? Today, we're exploring an absolutely massive technological shift. We're looking at how artificial intelligence is stepping out of high-tech research labs and right into our actual wallets. It's transforming personal finance into something faster, way smarter, and incredibly personalized to you.
Okay, let's dive into this. Can I afford a new car? Or maybe for you, it's something like, am I actually saving enough for retirement? Or, man, which of these random subscriptions should I cancel? These are those highly relatable, super anxiety-inducing questions that we traditionally struggle to find clear answers to. I mean, in the past, answering this meant doing a whole bunch of manual math, guessing about future expenses, and just hoping for the best, right? But today, AI is stepping in. And it's not just showing us our bank balances, it's actually answering these complex questions for us by processing enormous amounts of our personal data basically instantly.
So here is our roadmap for today's journey. First, the new financial landscape. Second, smarter budgeting and saving. Third, automating wealth and debt. Fourth, your invisible financial shield. Fifth, the risks of AI. And finally, number 6, the future of money. Let's get right to it.
Section 1. The new financial landscape. Moving from manual spreadsheets to proactive AI.
Think about the sheer, immense complexity of modern money management. We are constantly juggling multiple bank accounts, credit cards, digital wallets, retirement plans, the whole shebang. Add to that persistent inflation making groceries and housing way more expensive, plus fluctuating interest rates messing with our loans and savings. Keeping track of all these rapidly shifting variables manually, it's basically impossible for the average person. I mean, planning for the future has literally never been harder. The old way of handling this was entirely reactive. You know the drill. You'd look at a paper bank statement at the end of the month and suddenly realize, oops, I already made a financial mistake. But the new way, powered by AI, it's built on real-time predictive analytics. It automatically categorizes every single transaction the second it happens and delivers personalized, proactive insights. So instead of reacting to a problem after the fact, AI processes all those variables instantly to help you avoid the problem altogether. It's a real game changer.
All right, Section 2, Smarter Budgeting and Saving, Finding Hidden Money with AI.
Let's look at an everyday cash flow case study. Meet Sarah. She's a 32-year-old marketing professional living in Chicago. She earns a really solid salary, about $85,000 a year. But despite making good money, she was incredibly frustrated because she just couldn't figure out where her money was disappearing to each month. Now, what's really interesting about this is how AI takes those raw numbers and turns them into actionable context. By connecting her accounts to an AI-powered app, it instantly generated her spending habits without her having to input a single receipt. But the AI didn't just passively show her, hey, you spent $420 on dining out. No, it compared this against her historical trends and gave her a personalized, proactive insight. It essentially told her, you are spending a lot on restaurants right now. If you reduce your dining expenses by just $150, you can actually hit your vacation savings goal 2 months earlier. It gave her the why behind her spending.
And check this out. By simply following the AI's behavioral tweaks, things like canceling unused subscriptions it flagged, limiting food delivery to just the weekends, maybe using public transit a bit more, Sarah was able to reduce her unnecessary spending by a massive $3,000 in just 1 year. $3,000. Think about that for a second. She didn't get a raise, she just used AI to catch the tiny little leaks in her wallet that were completely unnoticed before.
And this brings us to an incredibly powerful behavioral economics concept. It's called saving without friction. Look, saving money is often way harder than earning it, right? Because it requires constant disciplined decisions day after day. Well, AI removes that friction entirely. By analyzing your income patterns, your bill schedules, and your spending habits, the AI calculates exactly how much money can be safely moved into savings without causing a cash shortage for you. Then, it automatically transfers these small, safe amounts. The result? You consistently build an emergency fund without ever feeling that painful pinch in your day-to-day finances. It just happens in the background.
Moving on to Section 3, Automating Wealth and Debt, focusing on robo-advisors and smart repayment.
So now that we've got a handle on everyday cash flow, let's zoom out to long-term wealth and debt. This is really where AI acts like a magical financial mentor,
stepping in to remove the biggest obstacle to complex mathematical decisions, human emotion. For decades, successful investing required either really expensive advisors or hours and hours of your own research. Now, AI-powered robo-advisors lower that barrier completely. Take Michael, a 25-year-old software engineer. He wanted to invest but was totally overwhelmed by all the options. The AI just asked him a few goals-based questions and instantly built him a diversified portfolio focused on long-term growth, with a high allocation to stocks and ETFs. Now compare that to a 60-year-old user whose AI-generated portfolio automatically shifts to conservative bonds to preserve their wealth. And even better, as the market inevitably fluctuates, the AI automatically rebalances the portfolio. This keeps Michael completely disciplined and totally prevents that emotional panic selling that ruins so many investors.
But AI is equally powerful when tackling the complex math of debt. Meet Emily, a nurse with $18,000 in credit card debt spread across 4 different cards, all with different interest rates. As you can imagine, she was totally overwhelmed. And this brilliantly illustrates how AI can help. Her AI tool instantly created this highly customized logic. It analyzed all her rates, directed her extra cash to the highest interest balance first, maintained the minimums on the rest, and, get this, even redirected money from a canceled subscription straight to her debt. Because of this mathematically optimal, highly personalized path, Emily became completely debt-free in just 3 years. She saved an absolute fortune in interest.
Which leads us to Section 4, your invisible financial shield, the behind-the-scenes protections.
You see, AI isn't just about growing your wealth or paying off debt. It is actively working in the background in real time to protect your money and optimize things like your taxes. It essentially acts as an invisible shield against an increasingly sophisticated landscape of cybercriminals and financial fraud. Unlike rigid old security systems that just follow basic fixed rules, modern AI evaluates thousands of transactions every single second to establish exactly what normal behavior looks like specifically for you. It learns your unique habits. So let's say you buy your usual groceries at your local store, and then, 3 minutes later, there is a massive, expensive purchase initiated in another country. The AI instantly recognizes that anomaly. It can immediately freeze your account and send you an alert, stopping fraud in its tracks way faster than a human ever could.
Section 5. The risks of AI. Understanding the limitations. Now, I want to slow down our pacing for a moment here because we need to be incredibly pragmatic. AI is an amazing tool, but it is not magic. It has very real limitations, and blindly trusting it without understanding those limitations is honestly a recipe for disaster. You really must understand 4 main risks here. First up, data privacy. These tools need your sensitive data to work, so you absolutely must use strong passwords and multi-factor authentication. Second, bad data. AI is only as good as the info it has. If you get a sudden raise or, say, have a baby and the AI doesn't know about it, its recommendations will be totally flawed. Third, algorithmic bias. Since AI is trained on historical data, it can accidentally reflect historical prejudices in things like lending algorithms. And finally, over-reliance. You cannot just put your finances on autopilot and walk away forever. So the crucial point is that consumers must view AI as supportive guidance, not an unquestionable decision maker. You still need to do regular financial reviews.
And that brings us to Section 6, the future of money, predictive planning and human judgment. When we combine AI's capabilities with human judgment, the future looks incredibly bright. Let's move to and see how this builds for the Johnson family from Colorado. They had 2 working parents, 2 kids, and a giant mess of disorganized spreadsheets trying to track college funds, mortgages, and emergency savings. By integrating AI, they didn't just fix a single month's budget. They aligned their daily spending with their ultimate wealth goals over a 5-year period. In year 1, the AI handled the basics, categorizing spending and catching wasted subscription money. By year 3, the AI was using its predictive forecasting to dynamically recommend extra mortgage payments during months where they had a cash surplus. And by year 5, they achieved a fully funded emergency fund and saw a massive drop in their consumer debt. Their financial stress basically vanished because they had consistent, data-driven support working with them over that entire 5-year span. Which brings us to this really powerful final thought from our source material. The future of personal finance is not about choosing between humans and artificial intelligence. It is about combining human wisdom with AI-driven insights to make smarter financial choices every day. Look, AI can process millions of data points. It can automate the boring stuff, and it can spot trends we'd completely miss. But at the end of the day, it is up to you to set the goals and make the final call. So, as these incredible tools become more and more accessible, the question is, Are you ready to take control of your financial destiny by partnering your own human judgment with the power of artificial intelligence?